PipSnipers here, back for another update. Let's take a look here at Cake. Now, I'm very bullish on Cake, and this structure actually reminds me a lot like ETC back when we had the 2021 COVID dump. Now, there are people that are saying that, we're at the, is this accumulation or is this distribution? Now, accumulation, it usually happens when the asset is still at the lows. Now, we can not only see this with Cake, but we can also see it across many of the alts across the sector. I think it's about 95% of alts are still at the lows and still going through accumulation. So take a look here at Cake versus ETC, and you can see that back here in 2020, look how we rejected at the lows. This is your range. And this is your A, B, and your C, like this. And you have the same thing. You have your A, B, and C on ETC before it rallied hard right above these highs. Okay, so I'm thinking that we rally hard above these highs, and this was the bottom here on Cake. And now all we're doing here on the small time frame is just simply filling in this wick and creating a base for this Wyckoff accumulation schematic. I am in a little bit of a short, just a scalp trade, nothing huge at all. Taking it down for our secondary test in phase B. Remember, I said this is how the market works when you're at the bottom. This is exactly what Cake did. This is the bottom. It went like this, and then it did this. Okay, and then you're actually building longs, okay? You're building longs and people are placing their stops right here. This is your trendline liquidity. And then this is what it does. Does that. And then it comes down like this to take out this trendline liquidity after taking out these highs. And this is actually a little bit higher here. So it takes out this high and then it comes down, and this is your A, B, C. And then if you zoom in, this is your selling climax. Then you have your automatic rally, your secondary test, your failed breakout. And now I'm taking this down on the trade I showed you, down for your secondary test in phase B. Then you're going to have your failed break. And then you actually have your markup from after your secondary test in phase B. Okay, your markup from there. So that's what I see on Cake. Very bullish. I do think that we're just going to range around here, chop around a bit, make investors and futures traders pull their hair out, while all of the spot holders just have to sit back and be patient. We should see very good times ahead, and especially after now that we got all of the longs taken out of the system, we can start on a clean slate. Okay, so yeah, I think Cake comes down to around here, down to backtest this 200-day moving average at around 246, and then pops up from there. Okay, this would be your selling climax, your automatic rally, second test, failed break, come down for your secondary test in phase B, taking out the 200-day, and then we pop off from there, and then come back up to this breakdown area, to this breaker right here, at least. Okay, so I do think that there's a lot of trap holders up there. A lot of trap holders at those highs. And if you look at it, we've rejected off of it 6 times already. Once, twice, 3 times, 4, 5, 6, 7, 8 times. So it's likely that the next time, just judging by the way this price action is playing out, will be a successful attempt at a breakout. I think that we come up to the 50% fib at around 675 and maybe even see a fake out to 790 to 861 before coming back to tap this range as support and then continuing up toward the higher macro retracements at 10 to 11, and then I would say a possibility of wicking up to 14 to 19 buck. So right now, cake is undervalued. If price were to come up to this 50% fib at 675, I would 675 to 861. I'd consider that fair value, and then 10 to 11 would be overvalued. 10 to 11 and possibly even a move to 19. Now, this is what you usually see in the market, especially when you have a Wyckoff. When you have a Wyckoff schematic, you break out. Sometimes it can result in the breakout, you have your back test, and then you continue up from there. And a lot of people get long over here, or get long over here, and place their stop down here, right at this back test, thinking that the price won't ever revisit that low. But what happens is we go in for the final stage of euphoria after this back test, and then we come back to revisit that low. You not only revisit that low, but actually take it out and come back into the range, into the upper quadrant of this range. Right? Just to fully take out all of these stops. And then you may see mean reversion, or it may even just continue on down. So we'll see how this plays out. I think there's been a lot of accumulation on cake so far, and it's definitely a coin that requires patience. In order to negate the possibility of this wick fill or this move down for our secondary test in phase B, I would want to see a move back above this 9-day moving average at 355, which would prompt a move to the toward this high time frame supply. Like I said, the same supply that we've used about 8 times in the past, right around here. Hope you guys enjoyed the video. If you guys like the content, please like, share, subscribe, comment, and if you haven't joined the free Telegram, then click the link in the description below to join. Peace out and take it easy. I'll see you guys in the next one.